there are no real safe places to put your money anymore. And the reason I talk about putting it in gold and silver, it's two of the few assets that haven't been blown out of proportion. And the only reason they haven't been blown out of proportion, as they should have been, is that they're the canary in the mine shaft. And there's a concerted effort to mute them because rising gold and silver signals problems with the currency. And it signals that the emperor, isn't wearing any clothes. And so they're caught. They're caught between a rock and a hard place.
Probably the biggest blow against gold and silver right now is that they're not rising in response to runaway inflation. After all, that's what for many investors know about them. Gold and silver have been recognized as valuable metals and have been coveted for a very long time. Even today, precious metals have their place in a savvy investor's portfolio. Precious metals are thought to be a good portfolio diversifier and hedge against inflation. But gold, perhaps the most well-known such metal, is not the only one out there for investors. In today's video, we'll tell you why Andy Schectman says that it's high time to buy gold and silver. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. The impact of inflation on the time value of money is that the value of a dollar decreases over time. The time value of money is a concept that describes how the money you have today is worth more than the same amount of money at a future date. Interest rates may well further strengthen the dollar, but a strong dollar tends to lead to a weaker gold price. But higher rates also suggest that inflation continues, and that is why rates have risen. And we don't think that will stop anytime soon, which means a further deterioration in the purchasing power of the dollar. And then the fact that the US economy would obviously be in a recession will start to eat away at the dollar. Where does our money go? We put our money in dollars where rates go up a bit but still receive a negative real return. Or we keep our money in real estate, stocks, or bonds that are inversely correlated with those rising rates. So there's really no safe place to put our money. The reason we put our money into gold and silver is because they are two of the few assets that have not been hyped. Gold and silver that have been wealth for 5,000 years. Gold and silver may fall, but in this environment, everything will fall more. And that mitigates exposure to those assets that are at all-time highs that are inversely correlated with rising rates. Owning gold or silver, it's not to get rich. Worst of all, they've done a very good job of reducing prices. And then people say if it hasn't increased in this environment of high inflation and low interest rates, when will it? No one in this country understands the importance of owning precious metals. They've been wrong because of the price, since the rise in gold and silver is the canary in the gold mine. And they don't want people to realize that the dollar is really a house of cards. A weaker dollar buys fewer foreign goods. This increases the price of imports, contributing to inflation. As the dollar weakens, investors in 10-year treasury bills and other benchmark bonds are selling their dollar-denominated holdings. Oil and other commodity contracts are often denominated in dollars. As a result, there's historically been an inverse relationship between the value of the dollar and commodity prices. Essentially, as the value of the dollar declines, the dollar-denominated prices of these commodities must rise to reflect their unchanged intrinsic value. Precious metals offer unique protection against inflation. They have intrinsic value, carry no credit risk, and cannot be inflated. This means that you cannot print anymore. They also offer true disruption insurance against financial or political military disruptions. From an investment theory perspective, precious metals also offer a low or negative correlation with other asset classes, such as stocks and bonds. This means that even a small percentage of precious metals in a portfolio will reduce both volatility and risk. Precious metals have no cash flow, so an individual will not receive any income. If a person owns the metal outright, there's also a storage cost associated with the investment. Precious metals are a useful and effective way to diversify a portfolio. The trick to being successful with them is knowing your goals and risk profile before you jump in.
Where do you put your money when everything else implodes? To me, it's in the safety of gold and silver, which have been wealth for 5,000 years. Gold and silver may fall, but in that environment, everything's going to fall more. And I think it's mitigating exposure to these assets that are at all-time highs that are inversely correlated to a rise in rates. To me, the only answer is to mitigate exposure to dollar and dollar-based assets. That's why I talk about gold and silver. It's not to get wealthy. The worst part about all of this is that they've done a very good job at muting the prices. And so people say, well, geez, if it hasn't gone up in this high inflationary, low interest rate environment, when will it? That's exactly what they want us to think.
That's all for today. Let us know your views on the comment section below. And don't forget to like this video before leaving. Thanks for watching.